members, Rotary ticket sellers, eventpro.ky, Funky Tanks, A.L. Thompson's Home Depot, Mango Tree Restaurant, Seabird's Bar, Eastern Avenue, Tashara Lewis in Kemenbrack. Get your golden tickets. Get ready to be a winner. Stand your chance to win $40,000. Second prize $4,000. 6 $1,000 prizes and more. The Music Extravaganza 2020. Building bus shelters throughout the Cayman Islands, supporting over 70 Rotary community projects. Rotary Central, not-for-profit number 232. Rotary opens opportunity.
The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. We are a not-for-profit, member-centric plan with a democratically elected volunteer board of trustees representing all sectors of the Cayman Islands economy. We have an all-in expense ratio of less than 1%, over 20,000 members, and $490 million in assets under management. We were the first multi-employer pension plan approved by the regulator in the late 1990s, and today we are still strong, secure, and are here for our employees and employers alike. If you would like to join or require further information, visit chamberpension.ky. And for information as it happens, follow us on Facebook, LinkedIn, or Instagram. Email admin@pensions.ky or call 745-7630. The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. Money Sense is brought to you by the Chamber Pension Plan. For further information, visit chamberpension.ky.
From Radio Cayman Studio, this is
Money Sense, bringing an informed financial perspective to the Cayman community.
If, God forbid, Aunt Petunia was to pass away, what would happen to that windfall that she would give to her favorite nephew or niece? Where would that money be invested for the next couple of years? My name's Emil Kalinowski, and I am coming to you live from the studios of Radio Cayman and 89.9 in Grand Cayman and 93.9 in Little Cayman and Cayman Brac. And I just wanted to say hello to the audience in Cayman Brac because last 2 weeks ago I forgot to mention them. And also I was accosted at the grocery store and I was told it's Cayman Brac, like rack, not Cayman Brock, like rock, which I have been saying for months. So please accept my apologies. We're also live via Photons on YouTube. So go to the Radio Cayman YouTube channel and you'll be able to see not only this show, but many other shows live. I'm joined in studio by a young man that's training for the marathon that's coming up at the beginning of December, by a young man that's steeped in macroeconomics, by a young man who knows where to put, or at least has some suggestions of where to put that money that perhaps Aunt Petunia was saving for a favorite nephew and niece. Adam Newman.
Good morning, Emil. Three shows in a row now for us. Let's hope we still have some listeners at the end of all of this.
You even said that your mom wasn't even watching anymore.
She's not anymore.
Oh, boy.
Now, I don't want to steal the limelight either as well. Just have to mention as well that Emil is also training for the marathon. You're doing the full marathon. So, that's a big deal. How's the training going?
Oh, well, thank you for asking. I am coming along. My runs are being finished, but not on time. So I'm running slower than last year. But my coach has said, don't worry about it. This year is 2020. Things are weird. Things are strange. We've all been affected in different ways. And so I just wanted to say thanks to my coach, Coach Kim Bailey. So thanks for always giving me that positivity. And I guess that's part of the show that we're discussing for the last couple of weeks is this year is so unusual. In past years, if you received some savings or a windfall or something, you would have invested in some stocks, some bonds, some cash. Set it and forget it. But the world is changing. Upheaval, new social contracts. People are being elected, maybe. What? So, what?
Let's stay away from that topic for sure today. Yeah, I mean this is unusual times, and I would say that the investment choices that have been made for the last 10 years are unlikely, in my opinion, to be the investment choices that you need to be making for the next 10 years, because the world looks rather different. But 10 years is a pretty long time to sort of make an investment call. So we're going to maybe narrow it down to what I think are some interesting places to invest over the next couple of years. And I've got a few ideas, so a very diverse set of ideas. So I'll pitch them to you, see what you think. Mm-hmm. So the first idea is the world needs feeding. We need to continue to feed the world, and so agriculture is a big area that I think should be a focus for investing in the next few years. The demand continues to go up, but actually supply through weather, through being in a sort of depressed cycle in terms of planting and stuff, means I think we're going to end up with a shortfall, and prices across the board broadly in soft commodities should do very well. And listeners, may well have heard me talking about this a couple of times. My top pick in this space is coffee. Yes, it's not food in the traditional sense, but an awful.
I'd like to see anyone get through a full day without several cups of coffee.
I was going to say, I'm drinking mine here right now.
That's right. It's a fifth food group. It's my understanding the National Health Authority is investigating whether or not to make coffee the fifth food group. Go on, I'm sorry.
Well, actually interesting as well, given we're talking about running, caffeine is actually a great source, I guess, of energy for runs. So there's a lot of sports drinks now which have caffeine in to help boost runners. But so coffee's an interesting one. It's if I break it down, demand continues to increase. Demand tends to reflect global sort of consumption trends, and coffee is consumed by generally by middle class. You know, as you become more affluent, coffee becomes a drink of choice. So particularly across emerging markets, you know, in places like China, we've seen a big increase in the demand for coffee. But we continue to see also increase in demand for coffee in other developed countries. So, you know, in the UK, in the US, particularly, coffee's become very fashionable, you know, with these coffee shops and these specialty coffees. So that the demand side, I think, is going to be very, very strong and consistent. But on the supply side, I'm expecting that we're going to have a bit of a supply issue. And that comes from a number of things. One is this cycle is a sort of very long and predictable cycle, and as the prices of coffee have remained fairly depressed for the last 10 years, there hasn't been so much investment in the supply side, particularly from some of the smaller farmers in Central America and in Asia, which would have normally provided a lot of the supply. Most of the supply increase actually comes from Brazil. Brazil is by far the biggest exporter or producer of coffee. I think nearly 40% of all coffee comes out of Brazil. But Brazil is able to produce coffee with machinery much cheaper than most of the sort of smaller farmers in other countries. And that's to do with topography as well as the size of the farms, etc. But I won't get into that. So in terms of what I expect, supply will be under pressure from most other places other than Brazil. Brazil's interesting in itself that I think it's every third year, just because of the crop cycle, you have a lower crop every third year. So next year becomes a time when production is naturally lower. So as we go through next year, we've got starting to have the stars align for a shortfall in supply, or lower supply than in previous years. Demand should pick up because hopefully we'll be, whatever it looks like, but some post-COVID more normalisation in terms of people being out and about, and that increases consumption through people going out to Starbucks and places. The other huge tailwind I expect for coffee comes from the currency side. So as I mentioned, Brazil is the biggest producer. The Brazilian real has been absolutely decimated versus the US dollar, as we've seen across a lot of emerging markets. I don't expect that to continue. I think the US dollar, which is we've spoken about on previous programs, is we're going to go through a much weaker cycle, the US dollar, and this will last a while. So that means ultimately that the US dollar price, US dollars are weaker, and therefore the US dollar price will have to go up versus the input cost, which is a Brazilian real cost, those input costs will also rise, reflecting the increase overall of the price of coffee. So that's my big macro view. As I say, I think soft commodities as an asset class will do very well, but particularly coffee is where I see a very big price increase over the next couple of years.
So I like the overview because there's a couple of time frames in there. There's the longer horizon, and you're saying that for the last 10 years, coffee prices have been too low. Therefore, investment in coffee plantations, grounds, orchards have been too low. But at the same time, you believe world economic activity to increase and the middle class to grow. Therefore, there won't be enough supply to meet demand in the long term. But in the short term, you're also saying next year we would get out of the corona lockdowns. Therefore, we would be going out and shopping more. And it happens to coincide with a third year minimum in the coffee crop.
Yep.
Excellent. How does one invest in coffee? I personally feel like I'm going to go to Kirk's or Foster's, go to the coffee aisle, and pull down everything from the shelf, store it in my closet, and then come back to Kirk's and Foster's in a year and offer to resell it at a profit. Is that how you are going to go about this?
Interesting enough, that would probably work, but I think to do it in large enough quantities to make it interesting for you, and I think you might struggle to find somewhere to store all that coffee. And coffee, it does have a shelf life. It does last quite a long time, but you don't want to come back in a year's time and find it's damp or wet and you can't sell it to someone.
Okay, so other than raiding Hurley's, how?
Well, I do it through futures, which is
what are futures? We know we can buy stocks and we can buy bonds at our brokerage. How do we buy futures?
Well, I think I'm going to caveat that and say futures are, unless you're a fairly experienced investor, I think futures are probably not necessarily something that you want to play for all sorts of reasons. But it's far simpler that I think Deutsche Bank and other places, other instruments offer like an ETF to invest directly in coffee. Interestingly, the underlying is coffee futures, but you're essentially buying the coffee price.
An ETF, does that stand for end the Fed, or does it? No, that's
something else.
Okay.
But,
what is ETF?
Exchange traded fund. So it's someone will piece together a product which replicates the underlying. So someone is basically replicating the underlying futures price of coffee, but it's wrapped up in a very retail friendly product. So you can go in and buy fairly simply one of these ETFs.
So it's very similar. It's innovation, let's say, that took off 20 years ago, and you can trade it just like a stock. You want to buy Apple, you can go to your brokerage, type in Apple, and buy that. And then you're saying there's something that's like a stock. There's a ticker symbol that you type in, and that represents coffee.
Absolutely, yeah.
Okay, all right, very good. I love it. I didn't think we were going to go down this road. This is fantastic. Okay, very good idea. How about, well, you know what? We're coming on a break. We're coming on a break in a couple of minutes. So before I dive into the next one, it seems like we're going to force two more topics into when we return, okay?
Yep.
So there are two more ideas that you're going to give us. Can you tease us? And that's what they do in the radio industry. This is what professionals do. I don't know how it's going to go for us. Is there any sort of tease that you can give us in the next 30 seconds about the two that we're going to discuss without giving it away? Cliffhanger.
Well, I think if anyone's listened to any of my other shows, I normally plug this particular investment every single show, so I think that's going to be a fairly obvious one. The other one's more nuanced. Certainly, probably the easiest thing for someone to invest in, something that people will understand well, but it's I say it's a bit more nuanced. I like rather than a straightforward investment, I like to have various different drivers. So this one is hopefully interesting for the audience.
Okay, everyone. We are imagining that poor, beloved Aunt Petunia has passed away, and she has gifted savings to her favorite nephew or niece, and where do you put that money for the next few years? We're joined by Adam Newman, who's providing us some ideas. So we'll be back after the break.
The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. Did you know that between May and August 31st, in support of the COVID-19 Emergency Withdrawal Program, the Chamber Pension Plan leveraged IT and human resources to successfully review over 16,000 member applications, approve over 12,000 applications, and paid over CI $130 million to our plan members. We are the Cayman Islands Chamber of Commerce Pension Plan, and we're here for you. For further information regarding the Emergency Withdrawal Program, visit chamberpension.ky. And for information as it happens, follow us on Facebook, LinkedIn, or Instagram. Email admin@pensions.ky or call 745-7630.
This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands.
And now, more Money Sense.
Welcome back, everyone, on the radio airwaves, on YouTube. My name is Emil Kalinowski. I'm joined in studio with Adam Newman, and we're going through a brainstorming make-believe scenario where we suddenly come into some money that we want to invest for the next few years. And Adam has come to the studio to present us with 3 ideas. He's just talked about something that was very interesting, coffee. So if you haven't heard the first part of the episode, go to YouTube, search Radio Cayman. You can rewatch that part. Adam, I love it. Where are we going to go next?
Well, this is something probably a bit closer to home for you. And we're going to talk about silver, but specifically silver miners. So by that, I mean silver mining stocks that actually, companies that actually mine for silver. As I say, I like to sort of layer on different drivers rather than having one sort of big driver. So if I break down the trade, first of all, I like silver. I think in a time of huge sort of monetary largesse from central banks, lots of printing, there are inflation worries, or at least the depreciation of the US dollar or other currencies versus hard assets. Precious metals are hard assets. They tend to do well when there's a lot of money printing. There's also do well when there's a lot of concern in the world, and so silver and gold feel the right place. Now, silver is gold's little brother. If gold does well, silver tends to do even better. There's an interesting ratio to look at gold versus silver, literally the price of gold over the price of silver. And we are at levels where, if you look historically, the price of gold versus silver is very high. And in a normal cycle, that should come down. So silver should outperform. So that gets me to the silver trade. But what does even better than silver? In a market where silver price is going up, silver mining stocks. And why is that? I mean, put simply, the profits from silver, the profits from a silver mining company are far more leverage sensitive to the silver price than the silver prices itself. So if the silver price roughly was to go up 10%, I believe the earnings, the amount that companies earn, goes up about 80%. So in an environment, as I say, where the silver price is doing really well, silver miners do even better.
And that's because there's both operating and financial leverage, right? So if you and I were to buy a silver coin, it would cost $20. But that's not how much it costs to buy silver for a miner. For them, it only costs, I don't know what it costs, right? 10, 8, 4, 15, whatever it does cost. It costs less to pull the silver out of the ground. And therefore, if there's any gain there above, that's why silver miners perform better than raw silver, or any miners, really. It just costs less than the final product that you can buy. It costs less to produce it.
Exactly. I mean, if I state it, as simply as I can, if a company makes money when the silver price, if the company breaks even when the silver price is at $15, then once we start to get to say $20, like the company is making an awful lot of money. So, and I'm just going to add one extra layer to this investment thesis. So we like silver, we like silver miners, and as you actually said about the gearing to operational and financial gearing, I actually like silver miners in emerging market jurisdictions. Why? Because their input costs are in the emerging market currency, and therefore they have even more leverage because the costs tend to be lower and the selling price, which is a US dollar price, higher. So you get for a while in this cycle, this extra boost from that. But investing, and my background was investing in emerging markets, you have to be careful because there are numerous counts of companies operating in more volatile jurisdictions where assets have been expropriated. So what I like, there's a number of Mexico is a place with huge silver deposits. Mexico, I would say, jurisdiction-wise, is relatively safe. It's, on friendly terms with the US. They have swap lines between the Federal Reserve and the Mexican Central Bank, and therefore I think it's unlikely that we would see a scenario where you risk losing your investment because the Mexican government come in and nationalize mines. So there's a number of miners in Mexico, operating in Mexico, that are listed on exchanges outside of Mexico. So I like that, listed on exchanges in developed markets. One name that comes to mind is a company called Fresnillo, which are listed in London. So that also gives me a bit of added sort of security of knowing that that they have to comply to certain listing rules there. So I think actually in this next cycle, a Mexican silver miner stock such as Fresnillo should do incredibly well.
So I'll just offer a couple of thoughts because we want to move on to your third and final idea. But the gold-silver ratio that you mentioned is a great indicator of monetary inflation. So you want to own more gold than silver when the world is in depression, disinflation, depression, and deflation. If money is hard to come by, then you want to own one of the ultimate forms of money. And what we've seen historically over a couple hundred years is that gold becomes more valued. However, that doesn't last forever. The powers that be finally get a hold of the monetary system and they start printing and creating money. They've been trying to do that for 13 years via the central banks. It hasn't really worked, and that's why silver is so high in the gold-silver ratio, indicating deflation. But I believe we're coming to an era whereby the central bankers will be set aside, shunted aside, and private banks will be commanded to extend their balance sheets, and that will create inflation. So I love your idea that we're heading towards a world where inflation will take place. And I love your idea regarding getting even more oomph by going to miners, and even more oomph by going to miners in emerging markets that have some of their costs in local jurisdictions, such as, because oil, for example, energy costs are usually priced in dollars, but other local wages.
Labor, yeah.
And so, fantastic. And you mentioned one particular company, but there are probably several. So before coffee, there was an ETF. Now you're identifying one stock, but is there a basket we could buy for people who are risk averse like me and want to buy a basket of emerging market silver producers?
Yeah, and I wouldn't say it's even about being risk averse. It's actually just, for most people, they don't have the time to research all the companies that they're investing in, find one single company, and that increases the risk. So that there's a basket of there's an ETF for silver miners, and I believe if we're talking about the more oomph, there's a basket for junior silver miners, which are the smaller companies in that space, which will give you more oomph if we are indeed going to a bull market.
I love it. We're good. Aunt Petunia is going to be really proud of what her little nephew and little niece have done. I love these first two ideas. Let's talk about the third one. We've gone from coffee to silver. These are sort of commodities. What's the third one going to be?
Well, no surprise here. So the third one is digital gold. This is Bitcoin. And, as I say, it would be unusual for us to have a a conversation and an episode here where I don't mention Bitcoin, but
what is Bitcoin cryptocurrency?
So
elementary sort of
explanation. So Bitcoin is a digital asset which is seen by more and more people and acting more and more like a store of value. So it is similar to gold in that it's a sort of monetary asset. It is effectively a blockchain, sophisticated blockchain, which allows the transfer of wealth between parties without the oversight of, or the necessary oversight of, a middleman such as banks or government entities. But, rather than that being a bad thing, it is the most transparent monetary system we've ever seen. Why do I say that? It's open source, so anyone can go in and look at the code behind it, but it's also transparent in that the transactions that appear on the blockchain are public. So, you can see not who's transferring money, but where money is being transferred around the world. That is far more open than the opaque financial system that we have at the moment, where banks, we never see what banks are doing and transacting, and that there's pros and cons to that. But I think, to try and explain why I'm so excited or optimistic on Bitcoin now, and I have been for previously, there is really seeing a global acceptance in terms of regulation and tax regime. Regulation is coming, but it's not so far. It hasn't been trying to ban or suppress Bitcoin. It's actually just protecting people, investors who want to put their money there. We've seen huge signals out of the US where commercial banks are now able to look after digital assets. That tells me that governments aren't trying to get rid of them. We saw an announcement by PayPal. I think they're the fourth largest financial company in the world, who now allow purchases and sales of cryptocurrency, which will primarily be Bitcoin, within their platform and their ecosystem, which is a huge move. We've seen corporations who are now adding Bitcoin to their balance sheet, which is, again, legitimizing the whole space. But I think, we talk about it being digital gold. Gold has been around for 5,000 years and used as a monetary, used within the monetary system. And gold's not going away anytime soon, and central banks around the world own an awful lot of gold. But we are moving, we've talked about these sort of generational changes. We are moving, or we have moved already, to a digital society. And as boomers become less, because, they get old and sadly die, and millennials become a far bigger cohort, they're far more comfortable with owning digital assets such as Bitcoin. So there's this huge trend shift that we're going to see going on. So we've got, at the personal level, this acceptance, but also at the institutional level, the corporations, the asset managers who are willing now to put money into an asset which is in its 13th year, and it has now a really strong track record. So again, it works well in an environment where the government are printing a lot of money because it has a finite supply of Bitcoins. And also to hedge, because its correlation with a lot of other assets is low, it also hedges your portfolio, makes your portfolio stronger. So that's in a nutshell, the Bitcoin thesis.
I absolutely love it. And one of the things that I am most impressed by Bitcoin is that it has suffered devastating collapses in prices for the last 10 years, and it has come back each time. I've counted 3 falls in price of more than 80%, and it's come back to set new all-time highs over 10 years. So it's very impressive in that idea. And everything you've said, I agree with there. I suppose that we do have to say, because the lawyers are in here and they're staring at us, and one of them's taken out their pen and he's writing very furiously, that, Adam, you are not a medium, a warlock, a wizard. You cannot see into the future. You do not have a crystal ball, and nor do I. And so we don't know. We're not saying this is advice. We're just saying this is a fun exercise, a discussion. Where might you put your money other than the usual traditional investments? And I really enjoyed it, Adam. Adam, we're running out of time. I suppose if you could say in just a couple of words, literally a couple of words, how does somebody buy Bitcoin? How does somebody first start investigating Bitcoin? Where do they go?
There's loads of resources on the internet. So perhaps it's easier if I post something to the YouTube channel. There's a I think it's called Bitcoin.com, which has a link to loads of resources to learn all about it.
There you go, ladies and gentlemen. Go to the Radio Cayman YouTube channel in the comments section. Adam will be there, and we really enjoyed our time with you. We'll see you in a fortnight, and enjoy the rest of your day.
Money Sense is brought to you by the Chamber Pension Plan. For further information, visit chamberpension.ky. The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. Did you know that between May and August 31st, in support of the COVID-19 Emergency Withdrawal Program, the Chamber Pension Plan leveraged IT and human resources to successfully review over 16,000 member applications, approve over 12,000 applications, and paid over CI $130 million to our plan members. We are the Cayman Islands Chamber of Commerce Pension Plan, and we're here for you. For further information regarding the Emergency Withdrawal Program, visit chamberpension.ky. And for information as it happens, follow us on Facebook, LinkedIn, or Instagram. Email admin@pensions.ky or call 745-7630.